So, Rob,
Great.
whenever you're ready to get going.
Perfect. We'll jump in. 5 things. This week's going to be 7 things. Thing number one is the January CPI is above and comes in above expectations.
All right. So, CPI stands for the Consumer Price Index. It is generally regarded as the index for inflation. Now, between all of us, these numbers are so adjusted and so screwed up by the government that it doesn't actually measure inflation. On top of that, everybody's inflation rate is different, right? So if in the last few years you had to buy a new house or rent a new place or sign a new lease on somewhere where you're living or buy a new car, your personal inflation rate is going to be very, very high. For other people, it'll be lower. And so everyone's going to have their own inflation rate. But the CPI, the Consumer Price Index, is the index that most people look at when they're trying to think about inflation or the cost of inflation. And the way I really want to rephrase that is inflation is the loss of purchasing power of your dollars. And so, imagine last year you worked really hard. You didn't necessarily spend as much. You held off on maybe some big purchases or an expensive vacation, and you saved a bit, and you have $1,000 or $5,000 or $10,000 in your savings account, in your checking account, whatever fits your personal circumstances. Maybe it's $100. But the point is, with inflation, the value of that, the purchasing power of that money will be decreased a year from now. And that's why inflation is so insidious. Now, the Federal Reserve has been trying to get inflation, which has been running very high the last few years, down to its 2% target. And 2% is still theft. It's still wrong. It's the way they do it. And if you take a look, the Fed's mandate is actually stable prices. That's a 0% inflation rate. Them saying, oh, we've got a 2% target, that's sleight of hand for stealing from you. But like all of these government statistics, there are certain psychological numbers that matter, right? So as you get close to 2%, people will say, okay, great, the Federal Reserve has done its job. They're going to ease up a bit. The CPI last month was 3.1%. People were expecting 2.9%. And so you think, okay, well, is 0.2% really that big a deal? And it is. It is for two reasons. One, the less important reason is psychologically, people were hoping to see a number below 3%. You didn't get that. The other thing that's happening is when you look at sequential inflation, which sounds like, something complicated, it's really not. It's just saying, what's the change in prices from last month, right? This is sequential number. That was up 0.4%. And you think, okay, wait, why is 4% a big deal? And it is because that's from a month ago, right? And so what we're really looking at is that monthly inflation number annualizing at 5-6%. On top of that, services prices were up another 5.4%. That's been a problem for the Fed. Those numbers have been incredibly sticky. And then the other thing that we saw is the core CPI, which is the Consumer Price Index excluding food and energy, was up 3.9% year over year. That's about double the target. And that also was above the 3.7% that people were expecting. The conclusion here, higher for longer. The Fed's looking at these numbers, and instantly what happened was so remember, a few months ago, a lot of Wall Street was expecting rate decreases by the Fed in January, and deep knowledge investing in these videos, we told you, not going to happen. And then we got some data and everybody started thinking, okay, it's going to be March. And we said, no, it's not going to happen in March. And then, everybody's expectations got pushed out to May. And now the minute the market saw these results within one day, expectations for the first rate decrease got pushed out from May to June. And so in the last month or two, the bond market has gone from expecting the first rate cut to take place in January all the way back to the middle of the year. When Powell says higher for longer, you got it. This is what's happening.